GameStop. If you've been on the internet in the last 2 weeks, you've surely heard of it. But like most people, you're probably confused as to what it is and why so many people are talking about it. On the first episode of Arny News, let's dive deep into what GameStop is, what happened to their stock, and what it means on a larger scale. GameStop is the world's largest video game retailer. They operate around 5,509 stores throughout the US, Canada, and New Zealand. They've been on the decline for a few years due to the rise of online video game sales and failed investments in markets such as smartphone retail. And this sucker punch landed with the arrival of COVID 19, which affected the retail store in many obvious ways. So, now let's take a detour into the world of stocks. So, a word that you must have heard thrown around a lot is the word short squeeze. So, what exactly is a short squeeze? Let me use an example of a Harry Potter doll to help you understand. So, your friend has this doll, a Harry Potter doll, and you're thinking, how can I make money off of this? So, you go and you ask him, can I borrow it from you? And he says, sure, but I need it back in 1 year at any cost, right? So, you say, okay, fine, and you borrow it from him. So then you take the doll and you go to eBay and you see, okay, how much can I sell this for? And you think that $100 is a fair price. So you sell it for $100. But you have an idea in your mind that the price of this doll will go down because Harry Potter is losing popularity, let's say. So you wait patiently you wait for like 8 months, let's say. And you go to eBay and as you expected, the price has gone down to, let's say, $10 now. So now you buy it back and then you return it to your friend after a year, and now you've made $90 off of this. This is exactly what shorting a stock is, you know. So what you're doing when you're shorting a stock is you're basically betting that the price of that stock will go down in the future. But now let's get back to our example. Suppose Daniel Radcliffe, after 6 months after you borrowed this from your friend, he announces that he's going to make a new Harry Potter movie. And then these dolls become very much in demand. So you go on eBay, you panic and you go on eBay, and what do you see? It is selling for $1,500. But you know you have to return it to your friend, right? So now what do? You have to buy it back for $1,500, and now you lost $1,400, and you essentially have no money left and you have to give it back to your friends. And that is what short squeezing is. You know, when you lose money, when you bet wrong. And that is why it's such a big gamble shorting stocks. So what is a hedge fund? A hedge fund is a financial partnership of wealthy people that pool in all their money to make investments together. And a bunch of these billionaires which ran hedge funds anticipated that the GameStop stock would drop because of all the reasons I listed earlier, and they shorted the stock in huge amounts. And this would have made them a lot of money if things had gone normally. But this is where Reddit comes in. So for those of you that don't know, Reddit is a website where there are many forums where people can discuss whatever they want, and you can also maintain anonymity here. So there are many subreddits, from applying to college to discussing TikToks to discussing movies, and one such subreddit is called r/Wall Street Bets. And it's full of young people with that don't know much about stocks, and they aren't very educated, but they like making these high risk bets that usually they make these bets or they make these investments with borrowed money, like student loans. But that's what makes it like such a game for them. They think that basically they think that game like Wall Street is a joke, and they use words like stonks and tendies. They're really juvenile people. And one of these users called u/deep effing value urged people, hey, and he's been urging them since a year almost, to invest in GameStop stock. Not because he knew anything about short squeezing or anything like that. Mainly because he felt that it was undervalued, that the stock was less than what it should be, because he felt that GameStop was a really good company. And he kept urging these people, and eventually they started buying it, on this group, on this subreddit. And what happened was, as they started buying it, the price started going up. And these, the hedge funds that had shorted the stock were in trouble because, it had increased in value. And then, this really interesting thing happened where Elon Musk tweeted just tweeted the one word GameStop, and he linked the r/Wall Street Bet subreddit, so which brought a lot of mainstream attention, and even more people started buying the stock. And on January 29th, it reached an all-time high of $483, which is almost a 1900% increase from its low point, 1900% increase from the GameStop stock's low point. So you can imagine how shocked these hedge funds must be, because they expected the price to drop, but now it's risen to such a high level and they have to return the stocks, right? So this is what happened. This is what the short squeeze was. One hedge fund which had, heavily shorted the GameStop stock was called Melvin Capital, and they had lost almost 53% of their investments, more than half of their investments, by the end of January. And eventually they realized that they have to buy back all the stock that they had purchased, because they realized that if they had kept letting it go, they were scared that the stock would go to such a high value that they would just be bankrupt and they wouldn't be able to buy it back. So they bought back everything, that they had shorted, and they tried to return it. But still, we know that they had suffered a lot of loss, because almost $3 billion, that's right, $1 billion had to be injected into the company just to keep it afloat. So, that's a very interesting situation. Now, how were these Redditors even able to invest in stocks in the first place? That's through an app called Robinhood. And Robinhood was a very popular app which looks to democratize and, allow common people to invest in stocks. And, that's what these r/Wall Street Bets people were using. And in the end, most people were using to invest in GameStop stock. But suddenly they have stopped allowing these users to invest in GameStop stock. And that's peculiar, right? In the free market, anyone should be allowed to invest in stock. But suddenly Robinhood wasn't allowing them. And a lot of people tried to sue Robinhood for this. But those terms and conditions that you never read when you're signing up to some service, well, in the Robinhood terms and conditions, it says that they have the liberty to stop the trade of any stock which they feel like. So all these lawsuits that are being filed against them, they will come out meritless, because in the end you should have just read the terms and conditions, is what the company can say. But what incentive does Robinhood have to stop this? How is it affecting them? So remember I told you that Melvin Capital was injected with $3 billion? This was done by a bigger hedge fund called Citadel, who's a huge customer of Robinhood. So basically what happened is, Citadel and all these other hedge funds are working together, and they would like to keep each other in their best interest. And Citadel basically might have, this is all speculation, right? They might have pressured Robinhood into stopping them from trading stock, and that is a sad situation. So this app called Robinhood, which is named after a person who took from the rich, gave to the poor, ironically restricted the actions of the common man to benefit the ultra rich, and that is the huge irony in this whole situation. So what can we learn from this whole incident? It shows that the power of the internet, and what a bunch of dudes on Reddit with some limited money can do to affect the ultra rich. But that's not the main takeaway. The main takeaway is that the inherent corruption of the system, where a common man cannot take part in these transactions now, because Wall Street people, or the ultra rich, have so much power, and the suits on Wall Street are still openly trading and they're still able to save themselves. But the people who have the stock, who are still trying to buy the stock on the common people, they aren't able to do it anymore, and that is honestly an unfair system. And I think that's what we have to take away from this whole issue, that the ultra rich are still able to restrict what's happening, and that's not fair. What do you think about this issue? Let me know in the comments below, and thank you for watching Arny News.